What's up, guys? Welcome back to the channel. It has been a really long time since I've done a live stream, and I'm happy to answer any questions that you guys might have today. It's good to be back. I really enjoy doing the live streams, but to be honest with you guys, it doesn't help out the channel that much. Making videos is actually how you make money on YouTube. So I started doing that a little bit more regularly. But I did start another business back in March. So I've been a little bit preoccupied with that. And I did need to take a little bit of a sanity break from YouTube for a while. So I will answer any questions you guys might have today. I will avoid taking positions on a lot of political issues. If you guys do talk about that, and you do know, of course, if you've been with me for a while, that I do not really make comments on the internal politics of foreign democracies. That is something that I don't do. If you're an autocracy, I'll comment all I want. But in terms of democracies, I don't, not that my interference would matter. I just don't think that me as a foreign American has any business commenting on the affairs of another democracy. Okay, so like I said, good to be back. Let's talk about some of the questions you guys have already put forward on this live stream. And let's talk about this one right here. First of all, I just want to say thank you so much, Shoeless Joe. Thank you, Hiker Dave 420, Jeffson, and Michael Wilson. You guys have been around for a long time in terms of my subscribers. I want to thank you for supporting the channel. Just to remind you guys, super chat features are on if you guys feel so inclined. So, number one question is from Jeffson: do we get a recession or not? Hand orange covering eyes. I don't know what hand orange covering eyes means, but I'll talk about whether or not we get a recession. So the market right now is, of course, not the economy, but the market is not really showing a direction one way or the other. A lot of things seem to be on hold. However, are we going to get a recession? We've been 6 months away from a recession for the last 18 months. The economy has kind of defied almost all expectations of what's going on right now with behavior regarding the Fed. And markets have behaved irrationally. The economy has behaved irrationally. I'm not saying this is a good or a bad thing. It's just counter to expectations. But we are seeing the long tail of effect from rising interest rates really start to take hold right now. And it's actually creating a little bit of market distortion in terms of long-term borrowing rates. If you guys have looked at interest rates on mortgages right now, those are close to 8%, which is out of whack in terms of the spread between the 10-year treasury and mortgage rates. It's much larger than it normally is, which means that banks that are making loans at this point are actually raking in the dough, considering that some of the larger banks out there, like Wells Fargo, that doesn't need any more deposits, Chase, Morgan Stanley, all those people that don't really need more deposits, their deposit rates are still in the 0.25 to 2% range, and they're turning around loaning money on a long-term basis at close to 8%. Whereas your smaller players that are still searching for deposits are in the 4% range for deposit dollars, and they're having quite a bit more in terms of margin contraction, but they still have a real healthy spread between borrowing rates and lending rates. So this is good for banks in general. You are seeing a little bit of disruption right now when it comes to money movement, and this was reflected in the earnings for Charles Schwab this morning. And that is, folks are moving money out of those high dollar deposit accounts where banks, like traditional banks, make their most amount of money, and then moving them into higher interest rate vehicles like bond funds or money market funds, where the banks themselves don't make quite as much money, and the interest rates are a lot higher for consumers. So that is actually a threat to a market rally. And I've made this point before on my live streams, but there are actually, I worked in a bank brokerage for a long time, and a bank brokerage is very different than a wirehouse or one of these larger brokerage houses where the investors there, many of them don't actually want to be involved in the stock market. And you tend to have a larger book of business in terms of fixed income or fixed annuities or something like that. They don't want to be in the stock market. Many of those people over the last 14 or 15 years have essentially been forced to be stock investors because there was no option in terms of CDs, greater than 1%. There was no option in terms of bond yields greater than 1 or 2%. And that's been for 15 years. Now that the 10-year treasury rate is so high, and short-term interest rates are so high, we are seeing more and more money being left off the table and going into shorter-term interest-bearing accounts. Some of those interest-bearing accounts though have more risk than people realize. But at this point right now, if you are moving into bonds, you will probably do fairly well in the next 2 to 3 years, as interest rates will probably remain higher for longer. And we are probably never going back to a zero interest rate environment, barring some terrible economic catastrophe again, like the Great Recession or like another pandemic or something like that. So we're even at our next recession, we will probably see the Fed rate not dip below 3% or so. Right now, the contraction in credit is really due to the fear of further rising interest rates. The hesitancy for people to buy into bonds and bond funds is really due to the fear of the Fed raising interest rates by another quarter or a half a point, and then that would depress the value of existing bonds. So that is not something that we've talked about on this channel for many, many years, because this has been all stocks, all the time. But I am a certified financial planner. I have been in the business for a long time. I've got a lot of experience in other parts of the economy rather than just stocks, like I talk about a lot on this channel. But yeah, let's talk about the chances of a recession. The chances of a recession are still fairly good. I tend, though, to look ahead of what's going on today and even ahead of the next credit cycle, meaning I'm already planning for what's going to go do well after the recession is over. I don't expect any recession we have to really last all that long. I think that borrowing a severe supply shock in oil or something like that, that the Fed has probably done raising interest rates completely. The markets aren't betting that way right now. They're still betting on another quarter point before the end of the year. I don't think that's going to happen. I think that long tail of effects from the Fed raising interest rates is starting to take effect. We've seen a big credit contraction, but most importantly, we're starting to see that people have run out of their pandemic savings. They did that mostly completely by March of this year, and now they're starting to actually add money in terms of credit card debt, which means that a cutback in spending is starting to come. And it looks like we had our first indication of that this month. So yeah, so I'm going to move on to a few more questions here. Bucket load of questions. Do you think that the U.S. stock market is overvalued? Yeah, I would want to base that on actual calculations versus historical price to earnings ratios, because we are returning to a more historically valued market at this point. So the answer to that is most likely a yes. The degree to how much it is overvalued is up for debate. And I do think that there is probably a correction coming. Now, we just went through a period about 2 weeks ago where all of the indicators were sitting on the extreme fear levels, which is a really good sign that we're going to have a market rally. I posted something to the community section, and basically the very next day, the market went up. That was an easy win, guys. When all 6 or 7 of my indicators are showing extreme fear, it just means that we're ready for a turnaround here in the market. Will this stick? It's probably not going to stick that much. I think that the best hope we have for the market right now is sideways movement for a little while until we figure out whether or not a soft landing, which by that I mean a mild recession, is going to happen rather than a severe one. I am on the side of a soft landing, which is new for me. I've never thought that the Fed would be able to do that. They've never really been able to do that in the past. So why would that change now? But that looks like that is what is happening. So, and this is the other thing that I address: the long lag till fund rises take a hold. That's actually happening right now, and it's happening in kind of a big way. All right. So, what impact will the 2 hot wars have on the U.S. economy? So, the war that's going on currently with the Middle East is probably not going to have a great effect on the economy. Even though Israel is striking airfields, really Iranian targets on airfields in Syria. Syria is not going to be able to respond in a meaningful way. Hezbollah is making symbolic attacks across the border, but they're not really going to be able to respond in a meaningful way either. They are part of a larger political concern in the state of Lebanon, and they're probably not going to get backing for going into a larger war. They're going to do something, though, to satisfy their Iranian overlords, but it's not going to be as significant as people think it's going to be. Let's remind everyone, though, that Israel and Hamas don't have any significant oil supplies. Israel is no longer a threat to Suez Canal shipping. There's been a peace agreement since 1979 between Egypt and Israel. They have a implicit security guarantee from the United States, actually against Israel trying to disrupt Suez Canal shipping. That wasn't honored in 1967, but once again, the environment has changed. Egypt is a military partner with the United States now, and that's just simply not possible anymore. They can't shut down Suez Canal shipping like they were able to do before. Egypt also is not on the side of Hamas. They are on the side of the Palestinian people, of course, but they are not on the side of Hamas. And that goes all the way back to Hamas's ties to the Muslim Brotherhood. They are an extension of the Muslim Brotherhood, which I believe was founded in the 1920s. I can't remember the guy's name right now. But yeah, founded in the 1920s. And they've had long issues with that organization in Egypt, and they are not friendly to them at this point. So I don't believe that this war will actually have an impact on the U.S. economy other than to boost defense stocks. And why that's going to boost defense stocks, and why am I saying that? Largely because most people misunderstand how U.S. military aid works now and has worked in the past. They keep seeing these numbers like we've given, $49 billion to the Ukrainians, and we're going to give $6 billion in military aid to the Israelis this year, probably double that because of what's going on now. People really misunderstand what that means. What we're really giving them is existing stocks of weapons. And then our contractors here in the United States take those dollars in the forms of new orders from our tax dollars, and all that money stays here in the U.S. What they're really getting is things that are really old. I don't think people realize that the Javelin was first entered into service in 1992. The Stinger first entered into service in 1984. The M1A1 tanks that the 31 of them that Ukraine is receiving today, those came online, I think, sometime in the early 1990s, 1991, maybe earlier than that, even if that's the A1. I think that's when the A2 came out. Anyway, that's a huge misconception that's deliberately being pushed your way, that we're sending them billions of dollars in cash. That's not what's happening. And most of those dollars are actually going to U.S. contractors. I'm not going to ask you to judge whether or not that's a good or bad thing. You can make up your own minds on that. U.S. debt from Michael Wilson. This is a huge concern of mine. I don't know why this isn't a huge concern for our politicians. Two things need to happen. We have to cut spending and raise taxes. We can't do one without doing the other. We have to do both, which would also help in terms of managing inflation, meaning there's less money that's going to be out there in terms of government dollars being poured into the private sector. There's less money that's going to be available for consumer spending if we raise taxes in an intelligent manner. This is not something that any politician will ever tell you, and this is why the U.S. debt situation is never going to be dealt with until it's an actual emergency that threatens our solvency. So, and yes, I am moving into bonds. If you're a member of my Patreon group, sometimes most of the time when I make a big trade, I announce that ahead of time in my Patreon group, or usually on the day. I don't announce that on YouTube because I'm under different regulations than most YouTubers are, because I'm a certified financial planner. I could violate a lot of rules by announcing that ahead of time. So will U.S. jobs go up, count go up or down? So my concern with U.S. jobs right now is actually how they're counted. I'm not sure that a lot of the job openings are actually real. And I'm not sure that actual people are seeing the job applications or the resumes that are being submitted. I think most of those are being reviewed by AI right now. And I think a lot of what's going on is not actually real. Like, I've gotten callbacks on positions that I applied for like 5 years ago. It's been really weird. Like, I haven't applied for a job in 5 years or 6 years. I'm getting callbacks on those right now. So I think that the U.S. jobs number, until unemployment claims reach about 350,000, that the economy is still growing. and it's still growing at a pretty rapid clip unless we have 350,000 job losses or so. And that is just barely losing out in terms of 350 jobless claims per week, or 350,000 jobless claims per week. That would be a mild recession if that's what we saw. So yeah. And last one is, how much am I up on Nvidia? So this is something that I mentioned in my Patreon group some months ago. I sold out over the course of a week most of my Nvidia. I kept my core holding of a couple hundred shares, but the rest of it I sold out at around 470 or so. It has gone up a little bit past that a couple of times since I sold, but I'm waiting to buy again at a later point. Nvidia is an enormously volatile stock. It goes up and down. The beta is a lot higher than one. It goes up and down according to any news. And they actually face a lot of geopolitical risks right now. The biggest one being the restriction of sales to China. And there are rumblings of that happening again. The other thing that's going on with the chip industry is that the reshoring of the chip industry, because of the CHIPS Act and because of financial incentives and really because of geopolitical risk, that has gone far better than I expected it to. The volume of chips that's being produced in the United States and in friendly countries, or countries that are very friendly to the United States, has increased so rapidly that I just didn't think it was possible. And the largest factory for Taiwan Semiconductor Manufacturing Corporation, the one that's supposed to be opened up in Arizona here in the next couple of years, that's still not even open at this point. So I wasn't really convinced of the reshoring plans. I didn't know how successful they were going to be. So far, it looks like they're more successful than I anticipated. The economy is not going back to where it was prior to 2020. We're going to go into something new. And that's a point that I make constantly, is that coming out of every recession, something new happens. It's not a repeat of what we had before. So Michael, I said I'd do that in the first 15 or first 5 minutes. It took 17 to go through all of those questions. But like I said, I'm happy. And Michael Wilson also says, I know you don't like politics, so you may not want to answer this one, but do you think that U.S. senators and Congress will saber rattle more with China and cause grief? Yeah, I do. I do, because it makes political hay. And I don't think it's very useful. And behind the scenes, the people negotiating important issues on the economy with the United States and with China are actually very sober professionals, and the talks are productive. It's We're not going to get everything we want, and the Chinese aren't going to get everything they want, and we're going to negotiate till we come to a reasonable agreement. The only point of contention where we might not come to a reasonable agreement, which may upset everything, is of course Taiwan. I do not believe that the Chinese government is considering war with Taiwan in a serious manner at this point. I think that they see the challenges that the so-called second best army in the world is going through with Ukraine at this point. And I think that they recognize that the challenges of invading an island nation 100 miles offshore, equipped with modern weaponry, and a client of the United States would be quite a bit different than what Russia is going through right now. So, yeah, I don't think that they are serious about it at this point. That could happen. I think that could be an option if the economy really goes sour in China, that they might want something to distract their population with. They have used this saber rattling before to do that. China has, and I'm sure that United States has as well. Doug B, longtime Patreon member, says hello all. Thank you so much. And Shoeless Joe again. Happy days. Yeah, I'm doing okay. Much better than before. My mental health break was pretty awesome. Is Iran a military threat? It depends on how you look at that question. Military threat, they're not an existential threat to the United States. And we have to be careful when we're looking at agreements that we make with them, what is included in that agreement. We in the agreements that we make with Iran, we don't really have the scope or the leverage to make an agreement with them that would limit their interventionist activities in the Middle East while we're doing exactly the same thing. So I think that is something that a lot of people don't realize when it comes to like deals that we're making with Iran. We're really talking about their nuclear program, limiting the amount of refining that they're doing and giving them financial incentive to limit the amount of refining that they're doing. A couple of things are going on there. Number one, do I think they want nuclear weapons? Yeah, probably. Do they realize that nuclear weapons are not going to give them everything that they think it is? Probably they realize that as well. But they're also seriously looking at nuclear power. Iran probably reached peak oil a long time ago. Not only that, their oil industry has suffered from decades of underinvestment and decades from a lack of expertise as well, and decades of underexploitation. And I think they're looking at the end of them being a major oil producer sometime in the next 50 years. And so they're wanting to invest in alternative energy sources as well. So and the what's going on in the Middle East, if you're watching news sources right now, or if you're reading Twitter or whatever, um, those news sources are really short sighted. And almost all of them don't have really much historical depth. They're only looking at this conflict or the treatment of minorities in the Middle East going back to the 1940s or so. And you really kind of need to take in the totality of the history of that region to get a better idea of what's going on. And you're not going to get that anywhere on the internet. You really need to go do some hard reading, check out some books from the library, buy some books online, and figure out what's going on, and realize that most of the identities that exist in that region are constructed on narratives that don't really have a basis in reality, and it's very nuanced. If you take a nuanced position on anything in the Middle East, you are automatically hated by both sides, and that's just reality. Like, you can't make a comment supporting Palestinians or a comment supporting Israelis or condemning one or the other without everyone hating you. So I'm just not going to bother. You guys can think or believe what you want to believe about what I believe, and it's not going to bother me. So, is block stock a lost cause? It's in the mind. It's in the mid 40s. I don't know about a lost cause, but it may be at the point right now where we're looking at it behaving more like a large cap stock rather than a tech stock. Basically, they need to build their real business. They made a large mistake by sinking so much money into cryptocurrency at this point. I've actually done a lot of studying on cryptocurrencies in the last 3 months or so for a variety of different reasons. But at this point right now, there's 23,000 different cryptocurrencies. The market cap of cryptocurrencies as a whole is about 1.1 trillion. It's up a little bit more than that today. And the idea with this is that you have to understand, if you take out the top 4 cryptocurrencies, and that still leaves you right around 23,000 cryptocurrencies. But that would mean that the average cryptocurrency has a market cap of about 16 million. So most of these aren't serious projects. They are scams. The vast majority of the 23,000 are scams. The ones that aren't even, they may have legitimate and laudable aspirations, but they aren't going to make it because they cannot sufficiently distinguish themselves from Ethereum or from Bitcoin. Bitcoin is looks like it's stabilizing as a store of value. It's stabilizing as a hedge, not as a direct hedge against different asset classes, but as a hedge, something that just has its own behavior. It doesn't act like a stock, doesn't act like a bond, doesn't act like cash. I think Ethereum and everything based on Ethereum is probably your best bet for the success that everyone believed that cryptocurrency could have as a legitimate and accepted means of exchange. But we're a long way from that, and FTX and that group didn't help. Didn't help move that process along. And I think we are in the middle of a crypto winter that's not going to abate for quite some time. And that's really sad, because there was a lot of potential when it came to cryptocurrency, a lot more potential when it comes to just usage of blockchain technology. Some of the most interesting things about blockchain technology that I wasn't anticipating is that almost all of the evidence being gathered right now against Russia for war crimes in Ukraine is actually being stored on the blockchain, so it can't be edited. So it's maintained in perpetuity and can be later used at trials. So you can't just get rid of it. So that's one of the things that I didn't anticipate. So how do you feel about the debt argument? I'm hearing that it's not bad in when considered in relation to GDP. It's not good either. Like if you put this in perspective, it's far worse than Chinese jet debt to GDP. Even when you throw in all of the what China did in the last 10 years was mostly push off what would normally be sovereign debt owed by the federal government of any state, the central government of any state. They push that off onto regional governments, cities and townships, and made them responsible for the failure of economic development projects. And in that way, they kept their debt to GDP level at the national level like super good. But even if you add all of that debt in, it's still better than the United States. The United States is still way better off than Japan is. And in that case, but you look at Japan, which functions kind of like a reserve. The yen functions kind of like a reserve currency as well. You look at the United States. That's what saves us from insolvency, is the fact that we always pay our debts. We do it in, of course, dollars that have decreased in value. But right now, and I've been saying this since 2008, it's not that the U.S. currency is so great or U.S. debt is so great. It's that everyone else is so bad. Yeah, I don't buy the argument that it's not bad when considered in relation to GDP. That is a moving goalpost that has changed over and over and over since 1980, when Ronald Reagan went on a spending spree, basically to try to get the Soviet Union to match that and bankrupt them. And part of that was also due to the fact that we had interest rates that at 18% for a brief period of time on debt, and we used that those high interest rates to raise a lot of money here and also to help out with inflation. But yeah, we started our campaign of military spending in enormous amounts back in the 1980s, and that has not abated. We spend almost $1 trillion a year in things related to the military, and I don't even think that $1 trillion a year, when you look at what our equipment is doing to a global rival like Russia, I don't even think that's necessarily a great investment of the wealth of our nation. I really don't. Even though it is providing jobs in the military sector, there's a lot more that could have been done to develop our economy outside of that space, outside of that military industrial complex. Yeah. So, what is a good price to buy NVIDIA? A good price to buy NVIDIA. That is also a moving target. I can tell you that my current level where I'd like to buy more is somewhere around the 280s, based on where their current revenue is. It's volatile enough that I think that it's probably going to touch that price sometime in the next year. So watch the historical behavior of NVIDIA stock, and you'll see that it is simply incredibly volatile. And I made the mistake before of not selling, because I don't usually sell stocks, guys. I just buy stocks and hold on to them forever, and I very rarely sell. NVIDIA is one of those where it's been a little bit more upsetting in terms of my timing on this. And I decided sometime like 2 years ago that when I hit points where it was severely overvalued based on current earnings, that I was going to sell. And that was the decision that drove my that was what drove my decision to sell, is when they had the blowout earnings, when the AI rally was hitting its peak because of ChatGPT, and just sort of that moment. So I do think that we're going to have a much better opportunity to buy that stock a little bit later on. So, yeah. Could Qualcomm be a buy at under 100? Yeah, I do. So the Snapdragon mobile chips, and the deal that they made with iPhone actually recently, look, that's not like a huge deal changer for the company. It's great. It's not going to have that much of an effect on their bottom line. But Qualcomm is just a solid business. And if you buy Qualcomm stock at 100, I think you can expect 10% growth over time on average, pretty much in perpetuity. They're going to do well for quite some time. Dumo says, welcome back. Important question. Is AI going to put you out of a job, and how happy will you be that you can spend more time at the bar and with the boat? It's kind of weird, man. It's my advisory business is less and less of my life. I do enjoy YouTube, but a lot of what people want when I advise them for finances is not actually what they need. And it's really hard to convince people to do things that are in their best interest. They're happy. It's really weird. They want to do the thing that costs more, that has less of a chance to succeed than doing the thing that's inexpensive but just requires discipline. And to be honest with you, I'm getting kind of tired of that. But AI, is that going to put me out of a job? It's going to put a lot of people in the financial industry out of a job. That is true. In terms of management, if you don't want to own individual stocks, and a lot of people don't, if you went with Betterment and paid 0.25% annually on to manage your account, you're going to do better than almost all of your friends. Just remember, when it comes to like stock returns, most of your friends are lying to you. They don't make what they say they make. Or if they are making what they say they make on individual stocks, they're not telling you about the 100 different stocks that they lost money on. And that is really going to be something that you need to keep in mind as you're moving forward, that a well-managed ETF portfolio with 70% of your investment assets is probably going to outperform pretty much everything your friends are doing with individual stocks, except that one guy that gets lucky. There's always going to be one of those. But you know, I've never been that guy. You know what I mean? Shoeless just says, what are the 6 new battery techs you mentioned? I don't have the articles in front of me on this computer right now. But yeah, one of them was actually what I discussed earlier with the Toyota solid state battery. I still haven't read that article yet, so I'm still not exactly convinced. I will say one thing though: Toyota doesn't really, they're really conservative, and they don't really announce things until they know that it can be brought into scaled production, and they're not going to fail at it, right? It's not a battery day where the 4680 comes out, but they still haven't figured out how to scale dry electrodes. Electrodes. They keep saying that's coming, that's coming, that's coming. It's still coming at this point. I'm not saying I've completely lost faith in their ability to just scale that production, but I think that it's taken a lot longer than we thought it would. I also think that there were at least 2 entirely new battery chemistries that were on there, and one entirely new approach to energy storage. Period. And the other thing that I should mention is Toyota made a big announcement about not about an ammonia burning engine. That's not new. What's new about an ammonia burning engine is taking the waste product, which is hydrogen, and using that to fuel for a hydrogen fuel cell. That's going to stretch out the chemical energy quite a bit further than they were able to do before. Ammonia engines by themselves were developed prior to World War II and were kind of a failure because of how hard it was to get it to combust and how low the energy output was. But also remember that one of the waste products from ammonia combustion is H2 hydrogen, which can be, like I said, recombined and used in a fuel cell. I haven't read through all the particulars on that page, on that paper yet, so I don't really understand the chemistry exactly right. So don't get angry if you are a chemist or a battery specialist. Yeah, I haven't looked at it entirely yet. So do I follow any Israeli ETFs? I used to quite a bit more, but I haven't lately. There are a few of them that are out there, including one, of course, the Kathy Wood one. But no, I haven't been following those lately. They've long been a leader in technology, particularly in software and in 3D printing, that sort of thing. But look, this is a country that just has enormous talent. I think yeah, if you've ever looked at IQ studies on different populations around the world, it only takes 5 minutes to understand why there's so many successful Israeli businesses. But the reasons for that, the selection pressures, the 3 selection pressures, I'm talking about genetic selection pressures over 2 centuries, are the reason why there are so many smart people located in that population. And it's really fascinating to look at that. So you see here, speaking of crypto, any thoughts on miners like Riot Mara? Thank you for fielding questions today. Maybe you don't follow these. I don't really follow crypto miners. I will say one thing. I do some consulting on the side with some IT stuff related to finances. Crypto miners are getting a lot of attention from the Justice Department right now. And we are being asked to run a lot. In fact, I was a participant in a project in June that was looking at finances from a crypto miner, and we were looking at how AI would model certain things. And I'm going to tell you right now that a lot of these guys are under investigation for their connections to foreign actors. And I do follow it from that respect. I don't follow these companies in terms of their in terms of how they operate, largely because I think that the whole process of crypto mining is likely going to change, and that proof of stake is actually going to be the way forward, especially the way that Ethereum does it, because there's a lot less in the way of energy requirements. So there's less hard cost to get into it. Yes, you earn less, but there's far less in the way of overhead. Um, so I considered shorting Nvidia and then thought better of it, as I suspected everyone else had the same idea, but one to watch. I would not short Nvidia, even though I think that the stock is going to decline. That is something that I would actively not short. So I typically don't short stocks, depending on who I'm working for at the moment. It's actually really problematic for me to do it. I can almost never get permission to do it. But even my option strategy is just buying puts on the stock or selling puts on the stock. Uh, those get blown through all the time. Buying calls or selling calls on the stock, those get blown through all the time. I'm forced to execute when I don't want to execute, or I'm wasting. This is one of the worst stocks I have for options. Almost every option strategy I've had has failed over time, which tells me that a shorting strategy is probably going to fare even worse. This is something that's a buy and hold until it's massively overvalued and then sell kind of stock because of how much volatility there is. There are a lot of stocks that I would short instead. Square is one of those actually. And I think that I'm not giving up on Square at this point, but I think that Square has maybe just entered a different stage of its development. Nvidia, on the other hand, is going to grow massively over the next couple of years. I made a prediction, I think 2-3 years ago, that Nvidia was going to be the largest component of the S&P 500 one day. I'm more convinced of that than ever, but it's going to be an extremely, extremely rocky road to come. So, yeah. So perusing the net the other day, I was surprised to see pictures of EVs charging back in the early 1900s. I had no idea. I did a video on that about the wild, wild west of early autos, and I actually put some pictures up there of some of the earliest EVs from back in like the 1910s. The vehicles that had like 40 miles of range and thousands of pounds of batteries in them and things like that. Yeah. So the limitation was chemistry before the lead acid battery was discovered in 1908. I think it was in 1908. And then we basically didn't really make any improvements on that lead acid battery until the 1970s. So there was a long period where EVs were an idea, but it was never going to happen because there were no improvements in batteries. And I think that nickel hydride, when that came out, that was the first possibility that we could ever have EVs, but even that was not good enough. It wasn't really until about 2005 when lithium ion batteries sort of hit a critical amount of production that it started to bring down the cost of manufacturing. We've only seen that cost drop over time. That's when it really became a big deal. But there was not a lot of advances in battery technology between 1908 and 1970. Somebody's going to argue with me. They're going to DM me and say, oh, yes, there was. Now, I'm not saying there weren't any. I'm saying there weren't significant changes in energy storage technology between 1908 and 1970 in comparison to today. I haven't talked about SoFi yet. All right, I'll be there in a second. So the pace of innovation right now in batteries is absolutely incredible. What's going on right now, I was big on board with lithium iron phosphate batteries because of costs associated with them just a couple of years ago. I'm telling you guys, what may come next is sulfur batteries, or not sulfur. Well, sulfur batteries could come, but they have issues right now with cycle life. What's likely to come next is sodium ion batteries, and that is going to be a cost game changer. We're looking at 1/10 to to 3/10 or 3/10 of the cost of what it costs to make a lithium ion battery at this point. That could be a game changer. And the watt hours per kilogram right now is approaching what lithium iron phosphate batteries have right now. It's really close to that right now. So if those LFP batteries are good enough for Tesla right now, sodium ion batteries, which will go into vehicles sometime before the end of this year, probably will be out BYD. Those are probably coming here pretty soon. So sodium ion batteries, and look, the opportunities to invest in sodium ion batteries, for the most part, most of this is actually US technology developed here in the United States, further refined over in China, and then coming back to us here in the United States. But a lot of it is, it's not going to have a lot of patent protection. Anybody's going to be able to produce these. It's really hard to say like this particular chemistry belongs only to me, right? You can't like, you really can't do that. You can patent industrial processes, but you can figure out another way to combine those chemicals that you can make the same type of battery. So none of this is going to be protected technology. And not that that protection works anyway, but we're looking at a huge revolution in energy storage technology. Not that we aren't in the middle of one right now, but it's going to accelerate and get even more impressive. So, all right. So, any updates on SoFi? Yeah, we do have updates on SoFi. This week is going to be a really, really big week for earnings. And I did talk a little bit about how smaller banks right now have really high deposit rates and they're attracting dollars in, but that is contracting their margins when it comes to loans. The big news for SoFi, of course, is that student loan repayments have resumed, which means that we're going to see some bump up right now in terms of what they're getting in terms of refinances. Also, what they're that's kind of the bottom line. It's not going to be what everyone thinks it is. The most impressive story about SoFi right now is actually what's happening on their technology end. I've already encountered like 3 or 4 times now offers, like credit line offers from different companies that I have different financial accounts with, that are all using Galileo technologies to basically their credit offering, where you get a line of credit based on whatever credit card sales you have. They take 10-15% of that until it's paid off. Trust me, guys, it's not a good deal. It's a good deal if you're the one offering the loan. It's not a good deal if you're the one being forced to take it. It's actually kind of terrible. It's like the interest rates are like 14% or something like that. But yeah, but the other thing on SoFi is everything else is just going fairly well with SoFi, except for their home loan department, of course. That the 44 million or so in revenues that they were expecting from the company that they took over, Wyndham Capital, back earlier this year. I bet they're not going to make $44 million this year in terms of revenue from loans. It's going to take a couple years for that to recover. When the fear that interest rates are going to go up further dissipates, that's when you're going to see the volume of loans for home loans really increase. What we're looking at right now with SoFi is probably an increase in financial services and an increase in technology services, and particularly the increase in technology services because of its recurring revenue potential is what I'm really, really excited about. I'm less excited about, new member growth. I'm very excited about the reduction in customer acquisition costs. Those were really, really high with SoFi. And from what I understand, not from an inside source or anything like that, just from watching interviews, is that customer acquisition cost has been cut rather substantially. So, Chris, I wanted to say thank you very much for the super sticker. Also, Moneyline seems to be on an upward trend, not so volatile anymore. Yeah, I'm still down on my Moneyline stock. I'm going to be down on that for quite some time. I don't have a huge position in that, just a couple hundred shares at this point. But yeah, it does seem to be an upward trend, but there isn't really a good reason for that. There just isn't a lot of news out there at all when it comes to when it comes to that stock. And so I did notice the uptrend from like $12 a share up to 23 something. I thought about selling my shares then. I'm still way underwater, and it's not that much money. So I'm just going to sit on it for a while. Their business is steadily growing. It's not growing at a pace really that justifies how much their stock went up. It really isn't. So I'm waiting for that to decline some more if I want to buy anymore. But yeah, Moneyline does seem to be up, but I can't find a reason for it. And that always makes me suspicious. Michael Wilson says, I've opened small positions in physical, precious metals, uranium, and U.S. oil. All the ETFs, are you considering commodities? Yeah, I only own commodities through ETFs like you do. I don't typically buy individual commodity companies other than like Albemarle. I'd probably buy Albemarle stock right now if I didn't already own some. I typically don't buy uranium miners as individual companies. I'm going to do that through an ETF because I don't know any. Like I know a lot about the oil industry. I know some about a lot of precious metals. I really don't know much about uranium mining, and I'm not interested enough to learn. So I'm going to do that through an ETF. I am also not all that interested in precious metals, and this is really strange because most people are interested in physical precious metals like gold and silver and things like that. I'm only interested when they have like massive industrial use, right? And acquiring those. So no, and I realize that gold does as a conductor and all that stuff, but I've never understood the fascination with gold and why it's so valuable. It's very pretty. Don't get me wrong, but until the industrial, really until the invention of electricity or the discovery of electricity, it didn't have a use, and yet it was still very valuable. And people say it's valuable because it's rare. I'm like, lots of things are rare, but they're not as valuable as gold is. Other metals, and what I'm really looking at is, like lithium and things like that. Those are going to, and sodium rather, those are going to be more valuable as time goes on to the economy as a whole. Rare earth metals are going to decline in their political importance, meaning they're going to be less in the forefront of people's minds going forward because all of our new battery chemistries, almost none of them are using these what are called rare earth metals. Rare earth metals, guys, aren't really all that rare. The naming convention is a bit of a misnomer there. They're not all that rare. And in case you haven't paid attention to my live streams before, lithium isn't rare at all. Okay, it's like the 26th most abundant element on the planet. It's not even it's not even concentrated in countries that are politically problematic. We have lots of it here. It's all over in seawater. It can be mined in a variety of different manners. Refining it's of course a little bit more difficult. We don't have refining capacity at this point, but lithium itself isn't rare. So every time there's a new lithium discovery, and people are like, "Oh, are we going to invade this country now?" No, we don't have to do that. It's not oil, so it's yeah. Doug B says I opened a SoFi credit card, received a 0% interest on balance transfer for 15 months, so I took it. Yeah, that's a pretty good deal. 0% interest on balance transfer for 15 months is a pretty good deal. Pay attention to interest rates on your credit card debt right now. If you have credit card debt, it's probably approaching 24 to 28%, depending on when you opened up that credit card. If it's an older credit card that you've had, you're going to be closer to 28% on any debt that is overhanging at this point. So let me see here. See, I think prices will drop further. I think we have a small downturn, so I'm waiting. Yep. Hold on a second. How long do you think it'd be before a significant growth and increased contribution to profit from SoFi's tech platform? Honestly, I don't expect growth in terms of contribution to profit at greater than 10% for quite some time, but I expect to see that to grow 10% quarter by quarter for a very, very long time. Yeah, so tomorrow is a big day for earnings, guys, and that's why I had this up on the screen. We have about $1 trillion total in market cap, and just in the top 20 people reporting tomorrow. Johnson and Johnson is reporting earnings. Bank of America, Lockheed Martin. There may be a storm coming for Lockheed Martin, and it may be in a really boring accounting storm. And let's talk about that. The Goldman Sachs Group is reporting earnings. Goldman Sachs did something that I actually think that is really positive for SoFi investors. There have been rumblings for a while because SoFi got into Green Sky and they were really getting into sort of like consumer business because they haven't typically been in the consumer investment business. They've really been in an investment bank that's really dealt with institutional investors and like really super wealthy people. But Green Sky was their attempt to get into the consumer market. And the idea was that if Goldman Sachs was buying Green Sky, that because of Anthony Noto's long relationship with Goldman Sachs, that there might be a buyout option on the table for SoFi coming from Goldman Sachs. I now believe that is off the table. And I now believe that in a lot of ways, Goldman Sachs is going to become a SoFi client for a couple of their different technology offerings. And I think that the idea, and I did not want them to be bought out by Goldman Sachs, no matter how much the buyout was for, because I think that SoFi has exponential potential. It's just a long time coming. And if you own SoFi at a loss right now, like I've been in it for since they went public, and I've added since then, but even at averaging down, I'm still down overall. Actually, I broke even briefly earlier this week, I think, or maybe it was last week, but I'm still very much down at this at this point. You guys know every time I'm on a live stream, that's when I sneeze, and that's the only time I sneeze. But anyway, also it's Prologis reporting tomorrow, Mobile, Bank of New York Mellon Corporation, Ericsson, Albertsons, United Airlines, and a bunch of different financial companies. We're going to get a better picture of where the economy is really this week. Earnings weeks are always very interesting, but we're approaching the point right now where there's so little direction in the market that I really need to take a look at everyone's current earnings and what they look like. So far, based on earnings reports yesterday, things were pretty good. And I don't say that lightly. Lately, I've been saying they're not as bad as I expected them to be. Yesterday was pretty good. And what I'm really talking about is Charles Schwab's earnings. They're kind of a bellwether for the rest of the financial industry because of when they reported, and especially because they are still managing that Ameritrade merger, which has cost them clients and which has cost them dollars moving out of the company. And their earnings still look very, very good. I expect Bank of America and JP Morgan to look very good. JP Morgan is not reporting tomorrow, but Bank of America is. Johnson and Johnson, of course, I expect them to keep trucking along. Prologis is going to tell me a lot, though, about the economy because of the space that they're in terms of real estate, the warehouse space. So, yeah, very interesting day tomorrow. Anyway, guys, we are approaching 1 hour or so. We're about 6 minutes over where I wanted to end today, but I just couldn't keep my mouth shut. Happy to answer any more questions if they come in the next minute or so. But other than if I don't have anything else, I'm going to go ahead and get off this live stream and go eat a snack. And okay. All right. I don't have anything else coming in. So I'm going to end this one today. Thank you very much. I know it was the first live stream that I've done in a while. I'm going to try to do these once a week or so, along with videos as well. And I'm going to be doing some more of the evergreen type videos. Those are the ones that I do on like general financial topics, and I get views on those every single day. A lot of the topical stuff that I do, I'll get 1,000 views one day and then no views 2 or 3 days after that. Some of the views that I do on basic financial planning, or some of the videos I do on basic financial planning, get views all the time in small amounts, but it's continuous. I'm probably going to do some more of those weaved in throughout some of the more topical stuff that I do. I'll be addressing some geopolitical questions related to the economy. I'm not going to really give my opinions on like conflicts or anything like that. But yeah, anyway, guys, thanks very much. Have a nice day, and I'll see you next time.